Hello, everyone. Good morning.
Hi.
I'm Tony Craddock. I'm the Director General of the Payments Association. I'm joined by my colleague, Robert Courtneidge. So it's good to be here. Thank you very much indeed to Magnus from Zoom on his presentation. We're going to be talking about something that is a very, very quick and easy statement to make, but potentially quite challenging to actually deliver on, which is we're going to announce a new era for payments. Now, as a veteran of the payments industry myself, and having had the honor of engaging with the Association of Corporate Treasurers through various events in the past, I know that the people in the audience are themselves real experts in their particular field. We come from a slightly different angle, and the conversation we'd like to have with you today, and I will be having a conversation with Robert Courtneidge, who's the syndicate director of this initiative that's being driven by the Payments Association. We're going to be seeking your input and your conversation. You can imagine that this is a fireside chat. You can imagine that we're sitting there together. We just call you across the room and we say, now, what do you think about this? So please do use the Q&A facility. And what I would like to have as the objective for this session is that by the end of it, you should be convinced that, yes, we are about to enter a new era for payments, or perhaps for something else. But we'll talk a bit about that in a minute. So, Robert, let's just kick off straight away, shall we? Let's talk a bit about the background. You know, what's really going on out there. First of all, let's look at the architect of the current financial system. It's been around for a long time, the Bank of England, but the last 5 years been a lot of activity. What's been going on, Robert?
So the main thing that's been going on is there is ongoing a massive overhaul of the RTGS system, which Accenture are doing for the Bank of England. And that is aiming to sort of bring it up to date. Speaking to other central banks, apparently every around about 20 to 30 years, there is a complete overhaul of their systems. And this is the next one for the Bank of England. But some of the great things that are coming out of this is currently, as all treasurers I'm sure will know, is that the banking system works Monday to Friday, 6 a.m. to 6 p.m. And you have to do all your settlements through the accounts between those hours. Under the revised and upgraded system, there is a new account that's going to be set up called the Omnibus account, and that account will actually have 24/7 settlement, provided there's sufficient liquidity in your account. And that opens up some very interesting opportunities. And with the Bank of England being one of the first banks in the world, first central banks to have one of these 24/7 accounts, and I did actually ask the question of the Fed recently, and they're not due an upgrade for quite a few more years, although they are looking at APIs at the moment and some tweaks around the edge, but they are not open for 24/7 settlement at the moment. So this is new, and this is what we're debating in this green paper that the Payments Association is doing alongside Boston Consulting Group at the moment. We're looking at what this whole change to the ability to settle 24/7 at the Bank of England could mean for the payments industry, and what sort of opportunities that raises.
So let's just talk a little bit more about the payment system. It kind of works pretty well, pretty resilient, pretty secure, pretty stable. Obviously, it's being improved using the stuff that's going on with RTGS. But is it currently broken, Rob? Do you think it's flawed, and if so, in which way?
Well, I think for us in the developed banking societies, I think we're pretty well structured. That said, we've recently had the upgrade to the SWIFT system with GPI, but GPI was really just a tracking system. The underlying rails are still about 20 years old for the SWIFT messaging system, and there are still problems with it. Some of them, the messaging, especially in relation to sort of doing source of funds and things like that with the RT130s, is still not available. Apparently, it's around, but a lot of the banks won't accept it. So there are still some problems with the SWIFT system, but I am told that something like over 50% of SWIFT transactions since GPI has come in are now happening in under 30 minutes or 30 minutes or less, which is phenomenal compared to where it was. But the longer use cases are still out there. We still do have the full corresponding banking system, so you still do have the need to move between various banks. And obviously that causes friction both in time and in cost. And so, yes, we are moving towards faster payments in the UK. We have the equivalent in Europe. So you've got both the debit and the credit system across Europe: SEPA debit, SEPA credit, SEPA instant. But are they fit for purpose? Certainly. But is there friction within those systems that could be overcome by something new? Yes, there is.
I think that's the point to me. Is while we have a kind of a generally, I suppose it's slightly biased view about how wonderful our industry is. Has been recognised as being world leading in the past. I think to some extent this work that the Bank of England is doing could make sure that it remains or re-establishes its position there. But I do also look at the costs, the relative lack of transparency, the duration, and the lack of access that the current payments industry has to many, many constituents, in particular those who are currently on the edge of or potentially excluded from society's financial systems. I don't mean necessarily the people in the developed world, such as the UK and the EU, but more broadly than that around the world. And I do think that there is we have. If you simply have to look at the number of people employed in this industry, it suggests to me that we've got something wrong. And a smaller industry would be a better industry. And perhaps we can do that with a slightly new approach, Robert. So let's talk.
Yes, Tony. I think there's a lot of scope for change. And as you pointed out on your next bullet here, that there has been a growth of interest in CBDCs. Certainly around the world, there are a few pilots now. There's a couple of live ones, including the Bahamas with Sandcoin, and we've got pilots in places like China where the digital one is being rolled out, and it's anticipated to go live at the Beijing Olympics, is what I've heard. So there's some real sort of push in that scope. But in the rest of the world, I think something like 70 central banks now are doing reviews and looking into CBDCs. So for corporate treasurers out there, I did have an interview for this green paper only yesterday with a corporate treasurer, and was surprised to find out that they didn't actually understand what CBDC was. So I'm going to assume a low level of knowledge in the audience, and I'll just talk you through what a CBDC is, because you may not be aware. So CBDC is a central bank issued digital currency. And the importance here, it's issued by the central bank. And that means it's central bank funds. So it's the equivalent of a banknote. The difference is it is likely to be issued electronically, and it will be issued electronically on a central system, so the central ledger system, not a distributed ledger system like Bitcoin and other cryptocurrencies, but because it's a central bank issued token, it will be issued on a centralized system, although it will be distributed. And the reason it will be distributed is because you want to have as many nodes as possible in order to avoid issues that you're going to have with security and cyber crime. So you don't want breach, and the more nodes you have, the more difficult it is to breach these systems. And at the moment, one of the biggest risks, obviously, to anyone that's going to move a currency onto a blockchain is the risk of security breaches. The last thing you want is someone hacking in and taking funds out of the central bank. That's not going to be good for a nation. It certainly won't be good for the consumers' belief in the system. So having it set up in such a way to ensure security is very, very key to this. Now, these tokens will be issued, as I say, by the central bank, which means they're coming out of central bank money. And it would be the equivalent of, as I say, issuing banknotes, but they are in electronic format. The benefit of them is that certainly in domestic use within their own country, you will be able to move them very quickly and easily peer-to-peer. They won't require the banking system to step in. So if you as a corporate need to send funds to another corporate, you can simply send them wallet to wallet, and the ledger will update at the end of the transfer and show that your ledger has been depleted by the amount of pounds you've sent across, and the recipient's ledger has been increased by the same amount. That ledger entry will be transparent and held, but of course, what won't be designated is the name on the account. So it will just be the account numbers that are undesignated held. However, because it's central bank, they will have full KYC on all the wallets that they're likely to issue for their tokens, and you will have full source of funds and full accountability of all those products. So it's a great thing, Tony, that is coming through. And as I say, certainly on a national basis, it has a lot of benefits. Is it going to be better than, say, faster payments are today? It will be a bit quicker and it will have less friction in relating to cost. But as I say, it's going to be in those third world countries where, as we said, where the banking systems are not so good, and where we have a lot more unbanked, that systems like this will have even greater utility and benefit.
Brilliant to have that overview. Thank you. Impact on cost, transparency, speed, ultimately access. So that sounds really, really good. But we put on here a new imperialism. Why do we put that down here for against China?
So we specifically looked at China here, and this is one of the concerns. And any of you in the audience that have read anything about the Chinese banking system in the last 15 years will have seen the growth of things like WeChat, WeChat Pay, and Alipay. Which was the growth of QR codes. And this was a massive development in China, enabling access to banking systems to everyone, because all you needed was a QR code on a laminated piece of card, and you could have access to banking facilities, which allowed traders up and down the country in market stalls to just be able to accept funds onto their QR code and effectively bank those on their digital wallets. This obviously paved the way for the digital one, which is being trialed across China at the moment. But the reason we put about a new imperialism is what China has been doing in the background. It has been growing its brick and road policy across many developing nations, both in South America, both in the Caribbean, both in Africa, and of course in those smaller states around China. And by doing that, there is the possibility that it could look at calling in some of the funding that it's put into those countries and in the digital one itself. And there is a fear that this will in many ways disintermediate the sort of central default currency of the US dollar as a reserve currency of the world, and reduce its influence.
That's huge, Robert. That's absolutely huge. That's got some significant systemic risk attached to that very statement itself. Just imagine if there's an encouragement for a significant proportion of the world's economies to be settling in digital yuan rather than dollars. I hope
this is why we're saying it's potentially a new imperialism.
Yeah, and so I believe that the American government and nation is as dominant as it is partly because of its dominance of the currency clearing and settling currency. So if China then take that over, either because they're imposed to or because they can offer a better and preferable cost or security system, then of course we really are looking at a new world, a new potential world.
And
So,
as I say, the thought is that of the, I think it's over 260 trillion that is held in US dollar reserves around the world at the moment. The understanding is something like 15 trillion of that could have gone by the end of this year when the Digital One trial starts rolling out.
at end of 2022.
So that's a lot of it's a lot of money in itself, albeit not a lot off of the total reserves that are out there. It's less than 10%, but it's certainly significant, and it would be an ongoing growth. And the real question is how much of the world would start accepting Digital One as a currency. And
So
we've already seen. Sorry, carry on.
So no, go ahead.
No, I was just saying we've already seen, Tony, that in El Salvador they've started to accept Bitcoin, and that's affected the US dollar reserves out of El Salvador alone. And there's some questions about whether that's a good idea. So it's any digital currency can start displacing actual currencies and reserves.
And as it often is in industries such as ours, it's the grayer part and the dodgier part that is most innovative. And then it's, as it has with gaming and gambling, it brings in new technologies, which are then adopted by the mainstream. So why? Let's have a little think about this. Why on earth is the Payments Association doing a particularly deep piece of work with Boston Consulting Group, who is world's leading consulting firm? And I think part of it is because of what John Cunliffe said the other day, Bank of England senior exec, quoted and talking about the fact that the Bank of England has its task forces, both a technical and a stakeholder task force, and members of our ecosystem are actively involved with that. But he said, we're not looking at doing anything quick, are we? And so, what was the timing? Can you remember what the timing was?
Yeah, Tony, he said we're not going to be doing anything this half of this decade. So he's saying it will be 2026 onwards that anything is going to happen at the Bank of England, which is a bit of a concern. But as I say, that's partly why the Payment Association has stepped in and is creating this green paper. And Tony, I mean, I know you might say, well, why are we doing a green paper? The Payment Association does lots and lots of white papers which give out what they think are good solutions into the marketplace and what people have come up with. The reason we're doing a green paper here is because we don't know what the answers are. And the green paper is all about raising the questions and asking the questions. It's not about giving the answers. The answers will flow on afterwards. So this green paper is very much about looking at this, the changes to the RTGS system at the Bank of England, the new omnibus account, what a 24/7 account could mean, and as part of that, how initially what we call a synthetic CBDC, which is a stable coin, a coin that is linked or pegged to a particular currency, in this case the British pound, how a synthetic CBDC, a stable coin linked to the GBP with funds held at the central banks, and that's why it's synthetic, because it's not issued by the central bank, but it's funds held at the RTGS account or the omnibus account at the Bank of England that are used to settle this. So what you've got is 100% liquidity because they're held at the central bank, and if in an omnibus account they're 24/7 accessible, and you have the security and the trust of the Bank of England holding those funds, so they're available one-on-one to the money put in, which is very different to where you've got a commercial bank where a lot of the money that's put into a commercial bank is lent out, and obviously therefore you haven't got a one-on-one. If there was a run on the bank, you may not get your money back. Whereas if it's central bank funds, you get 100% of your money back, and as I say, it's 24/7 liquid.
So let's talk about what we're going to be doing in just a moment. I'd just like to acknowledge those half a dozen people who have submitted some questions. Great questions. We will come to some of those. A couple of those made me smile, and a couple are controversial. So well done. Keep them coming. We'll do our best to handle them. And do notice that, of course, you can like or put your little star on the sticker on the ones that you'd like us to be prioritizing as well. So let's move on a little bit to really what we're doing here to help to bring in and announce, rather than waiting until the end of this decade, what are we doing to contribute to the conversation, Robert?
So this is effectively the nub of the green paper. It's saying that if we were to look at these central bank accounts, which are the RTGS accounts with 24/7 access, and we can plug those into some form of technology platform, whether it's a blockchain, certainly it would be centralized rather than decentralized, and have wallets attached to it, which would be the standard Ethereum wallets that you can get today. What sort of governance and what sort of regulatory format would you need to enable that to work? How could that actually work in practice? And the top I put PA Consortium, the Payments Association Consortium. Who would be the parties to this new entity? How would it fit together? Because at the end of the day, if we're going to this sort of new era of payment, SWIFT, Visa, MasterCard, all these current global payment systems that exist would need to be adapted to something like this new entity that we're creating. And the new entity would have to be able to hold these accounts at the central bank, so it would be an FMI, but it would also have to have access to the right technology, and it would have to have the right members to it that would enable it to be able to, as I say, flow and create solutions. And this is certainly one aspect of the green paper we're looking into very much in detail on what this entity might look like, who would be making up the consortium that would basically own that new entity, and how it would run in practice if it was delivering some of the solutions that we see could come out of these new central bank accounts.
So how have the people you've spoken to at the various authorities, FCA, PSR, Bank of England, Treasury, and others, have they responded to the fact that, we're a trade association, we've got 150 members, maybe a few thousand people who are actively engaged with the work we do. We're claiming to be looking in a new way at something that it could precede a new era in payments, or if not in payments in GBP. Do they not think, well, you upstarts, what do you know about this, or do they have a different reaction?
Well, I think as you know, Tony, the Payments Association has for the last couple of years gained quite a strong reputation with both the FCA and the Bank of England, amongst others. And so we're seen very much as an industry sounding board by those organizations for them to try and get a temperature of what the industry is likely to think about new developments. And it's in light of that we've made these approaches to, as I say, HM Treasury, Bank of England, and FCA in particular. But we've also approached the ECB and the Fed in the US. But the response we've had so far has been very positive. Whilst they could not be part officially of any of the stuff we're doing, they're very keen to be observers. And the Bank of England specifically seemed very pleased that we were actually looking into what use cases might come out of their new omnibus account. And one of the reasons for that is they effectively set it up, but it was set up because it was felt that there was a need for a 24/7 account, and in the refitting or the redesigning of the new RTGS system, it was something that could be put in there. But I think they hadn't really had time to go through it themselves and work out what use cases might come out of it. And so the fact that we're doing that work for them, and that we're going to be reporting out on this towards the beginning of next year, I think gives them the ability to think, yeah, this is a useful report for us to look at. And I think that's the benefit.
But the brilliant thing about this is we're not just, somebody said to me, it was the biggest compliment ever. So the Payments Association is known as a trade association that gets stuff done. So we're not just producing a paper, because that would be useful. People would read it and it would contribute to the ongoing journey of innovation that we're on, because as a catalyst for bringing together smart minds to tackle specific problems, and we're going to go on in a moment to talk about the use cases we're looking at, this is a useful contribution. We're doing more than that, aren't we? What's the technology platform? Tell us a bit about that.
So we've got a partner. We're partnering with a company called Pay with Glass, and they have been developing since 2014 a platform that can create interoperability. And that there's two key issues if you're going to bring in sort of an ability to use CBDCs on a global basis, or indeed stablecoins. And that is the ability for you to go in and out of the different tokens. So if you've got a GBP token and you want to spend it in America, it's unlikely that an American merchant is going to want to accept a GBP stablecoin backed by the Bank of England, but it probably would accept a US dollar stablecoin backed by the Fed. So if you have a system like the ones that's been set up here, it would be interoperable. So at a CBDC level, where you're dealing with CBDCs issued by central banks, what would happen is that GBP would transfer into USD issued by the Fed CBDC and be converted at an agreed bank mid rate automatically as it passes across to the recipient in the US. Equally, using euro done CBDC by the ECB, you could see the same happening across Europe in any euro-denominated territory, where you could send a GBP and it would be received as a digital euro issued by the ECB. And that is, I'm afraid, probably 20 years out, though, Tony. This isn't going to be something that's going to be there tomorrow.
But next year we're running some pilots, aren't we? The next 2 years we've got some pilots. We'll talk a bit about.
Yeah, I think you had a slide on that, didn't you?
Yeah, we do.
Did you not have a slide?
I do, yeah, indeed. Here we go. It just so happens we have one we read earlier. Look at that.
A bit like Blue Peter. Here's one you did earlier.
But one of the questions I'm sure will be asked by the audience is, does this not require a completely new regulatory framework? And therefore, maybe this has got to be stuck within a sandbox somewhere, but no more than that. To what extent can this be in the real world?
So if we're looking at the pilots that is listed down there, then the pilots can be done using, as I said, synthetic CBDCs. So these are stable coins issued one-on-one with a national currency, with the funds being held at RTGS accounts in central banks. And to work this through, you'd be able to store the funds, for example, at the Bank of England. They would then, as I say, you would equally have an account at the Fed and then another account at the ECB, and you would have stable coins being issued in those three denominations, which could then be freely transferable on the platform that Pay with Glass has created. And that is where you get the workable proof of concept. And you don't need to change the laws for this, because the way in which the laws work today on stablecoins, and stablecoin laws are being written, as we know. There's the MiCA regulation that is due to come out in Europe. There's HM Treasury's review of stablecoins and CBDCs, which is looking to put regulation in the UK. And there are similar laws that are coming out in the US. And they're all effectively saying, well, if your product today looks like electronic money, then it probably is electronic money. If it becomes systemic, then we need to treat you like a bank, and you run your systems like a bank. However, if we're holding funds at the central bank ourselves, most of the issues that come out of stablecoins disappear, because stablecoin regulation is also set up as if funds are going to be held at typical FMIs and or being held through insurance or through other bonds or securities. If they're held at the central bank one-on-one, then most of the law and regulation that will need to be put in place will not apply, and therefore it forms a very simple pilot solution that could be, as I say, rolled out pretty quickly.
Very good. So let's just look at some of the things we're going to be looking at rolling out. First of all, let's talk about this one. And we've got about 10 minutes, Robert, and then we're going to start answering the questions that are coming through.
Gosh, has time flown that quickly, Tony? It's always happens when I chat with you. Time just flies.
Yeah, it's good.
Hopefully I'm not boring people too much.
No, the difference is, but you're currently sitting in a bar at an airport on your way to Los Angeles. I'm stuck in a working unit down in Cape Town in South Africa, and you and I can't do anything other than tip a glass of water at each other.
Exactly.
Sadly, yes, that's the way it goes. But let's talk about this white label statement. Let's talk about this white label statement.
Let me just, So in the green paper, we've come up with 4 potential use cases for this RTGS account at the Bank of England, which can be accessed 24/7. And the first of these use cases is the ability to create one of these synthetic CBDCs, as I've been calling them, but we've called it a white label solution stablecoin. And effectively, this could be issued by banks. It could be issued by the likes of Yahoo, Google, Facebook, whoever's looking to issue one of these stablecoins as a new currency. This new model would enable those stablecoins to be issued. So, and within this use case, we're looking at even potentially small principalities around the world that might. So, if El Salvador didn't want to use Bitcoin and they were happy to use a GBP denominated stablecoin, we could issue that for El Salvador, and they could then start running their coins and have the stability of the GBP rather than the instability of Bitcoin as their new national currency.
That's
for
very
example.
Cool. That's very cool. That's very cool. I'd love to see that. So let's talk about. Are you happy to go on to the next one?
Yes, of course. Yeah.
Cool.
Sure.
Super.
As you said, we have got little time to do this, but cross-border payments are a big bugbear, aren't they?
It's a huge deal, and the G20 prioritised this as, after the pandemic, the most important thing for G20 to be looking at. There's a huge global conversation about this. Our the Payment Association Asia is currently engaged with the Institute of International Finance and others trying to move things forward. But we've come up with a completely, what I think is a revolutionary solution here.
Yeah, and as Tony's mentioned some, but the Bank of International Settlements has done 2 papers now on cross-border payments, specifically looking at how CBDCs, whether they are what is known as MCBDCs, which are multinational ones that can be used across many countries, and how those might work in practice in the future of cross-border payments. And I think it's a very exciting space. As I say, the ability to settle transactions and move them without FX issues, because they're done at interbank settlement rates, with peer-to-peer payments going through without any corresponding banking network. It's kind of creating the solution Ripple wanted to create, but ended up mucking it up by creating their own token, which fluctuates like Bitcoin. It's totally
kind of
unusual.
It's such an extraordinarily obvious oversight. But of course, the reason they did that is that Ripple needed to make money by selling its Ripples. I'm sorry, it's
XRPs.
It's XRPs. As everybody knows, with crypto, what goes up can come down, and it doesn't add the security. Let's go on to the next one. Here we go. Retail payments.
So retail payments is a massive one. We have the big schemes, Visa, MasterCard, Amex, basically covering the whole world with the retail payment solutions. And one of the biggest issues we've always had is if you moved into the sort of Bitcoin regime, Bitcoin can settle 2 to 3 transactions a second. I think you'll find that Visa, MasterCard are settling in the hundreds of thousands of transactions per second. Mm-hmm. So you were never going to use these sort of cryptocurrencies for retail payments. There has been some acceleration, and you can do off-chain transactions and things like that, but it's still not really fit for purpose. However, these new centrally issued but distributed ledgers are much faster. One of them has got up to 500,000 transactions a second at the moment in some of the testing that's been done. So they are much more fit for purpose and would be able to be used for this kind of solution. So this, as you can imagine, is one of the most highly debated, and nearly every party that's part of the Green Paper Syndicate is in the retail payment section, because that is their sweet spot. And if they can disintermediate, I mean, we've already got the ability of open banking that has basically started this whole process. But doing peer-to-peer payments using the CBDCs for the retail payments actually is even better and even less friction. So the other benefit is obviously smart contracts could be used to deal with the issue of chargebacks, which is something that hasn't been able to be addressed in relation to open banking yet.
This is
so there are
cool.
some other benefits.
I've got to say, I know I've been involved with this. So Robert came up with this, the idea for this this initiative while sitting in a coffee shop, not an Amsterdam coffee shop, but a coffee shop in Gibraltar in about June, I think it was. And when I heard about this, we talked it through. We thought the implications are just enormous, and potentially also on a few of the really thorny issues in payments, which I think, remember we've got treasurers out there listening. And by the way, thank you for your questions. Keep them coming. We're getting to them in just a minute or two. What about this final category of use cases, Robert? Talk a bit about this, because this is
one that was quite interesting to treasurers, because and the treasurer I was speaking to about this project yesterday really did quite get this point. So one of the issues treasurers have is you do need to hold funds in cash, and you don't always want to hold them in banks. And it's not just companies that have to do that. And this particular one, as you can see, is talking about family offices. It's talking about fund managers, where you have cash positions that you've got within your portfolio. And yes, you can hold them in different types of bonds, but the ability and the liquidity and instant access of a CBDC or funds held in a central bank RTGS account, which is accessible 24/7, is something that is never not been looked at before, because it wasn't available. It didn't exist. And so I think treasurers will start looking at this as a way in which you can hold cash. And we have, as I say, the fourth use case is debating that. And one other area, obviously, within that whole holding cash is the question of EMIs and PIs. So that's electronic money issuers and payment institutions, both of whom need to safeguard funds. Again, it's not easy to get safeguarding accounts at the current banking situation. And so to be able to put them through an RTGS account really does secure those safeguarded funds, and is a great solution for our industry.
And the irony, of course, is that all those safeguarded accounts are run by competitors for the EMIs who really don't want to run them, either because it's competition, or because it's too high risk, or because it's not sufficiently rewarding commercially. And you can understand why that's the case. But we set up the EMI safeguarding facility without thinking perhaps long term enough about the incentives for the banks actually doing the banking of those accounts. And maybe this would solve that problem too.
Exactly. And of course, all these four use cases are being debated in full in the lovely green paper, which is going to be 50 to 80 pages at the end of the day, of some really detailed, in-depth reviews of these areas, and will be available on the 4th of February. So we obviously, please come to the Payments Association website and download it after that date. And hopefully it'll be very useful to a lot of treasurers to look at how these actual use cases are developing in real life.
Yes, and in fact, today or tomorrow, I think we have a press announcement about the consortium and those organisations that are involved. And our initial predictions for what impact this is likely to have. I'm normally quite cautious about saying that this could be seen changing because I think there's a lovely question that came from the floor about we've discussed a new era of payments for several years. The MPA program has been delayed. I could put brackets even more. When will treasurers see a real change in how things are done? That's one of the questions. And in fact, we're going to come on to questions now, aren't we? So there is if we're looking at security and stability, there's going to be an impact on flow of funds. It's going to be a big impact on treasury, we think. What will this mean for you guys and girls in the audience? That's the question we're going to be asking. Robert, let's move on to Q&A. We've got 20 minutes or so, which I think is great. First of all, when will treasurers see a real change in how things are done? And that's in light of the fact that now this is not a replacement for the new payments architecture, is it?
No. And I think the good thing is that the treasurers are already seeing the benefits of, as I say, the Swift EPI system is already speeding up transfers, and I think so. This solution I'm looking at and talking about here, this new era for payments, is a 20-year transmission. I don't know what the word is. Anyway, the transition period, the interregnum, is around about 20 years, in my view. I could be wrong. It could be a lot faster, but I don't think so. Mm-hmm. But during that whole period, I can see that the benefit to treasurers will continue to grow. As I say, we've already got open banking, which I think is great for treasurers as well. I think there's some great opportunities that will come out of that, and the ability to do push payments is great. We've had a lot of push payment fraud, but we've also had some good solutions to that. So I think there are a lot of things coming down the pathway, of which this is part of it that we're doing here, and I think will form part of it as time goes on. And it would be great if some of the companies that are treasurers here would be interested in coming forward and being part of the pilot, because I think the pilot is going to be very exciting and will basically showcase the way forward on how this is going to work in practice, as I say, as we move towards 20 years hence.
And the brilliant thing is that although we are doing this in a collaborative way, because we're not the Bank of England or the Treasury, we don't have to do it in a way that is perhaps as mindful of the status quo as it might be. And so the pilots will be funded by the consortium. It's an industry body. The governance around that we're just developing at the moment. But the point is, if we wait till the central bank looks at this sufficiently seriously not doing it
2026 onwards.
2026 onwards. Well, watch out. The Chinese are coming. I know it's a bit flippant, but they really are, and the digital yuan is coming. It's there. It's been cooking for a long time. I believe that there's a lot of the banking industry is asleep about this, and I say that mindful of the fact many of our members are banks. But this is absolutely coming, and it's on its way. So look, there's a question that's coming to the top of the list here. I'm going to ask you, Robert, which is how will this impact on the treasury management systems, which already have an embedded payments engine in them? So how will this impact on the treasury management?
No. As I say, this is an iterative process. It's going to take place over time. The pilot in itself will be generating more API. I mean, I think APIs are the future. They've really come out of open banking, but we're seeing them coming in across the whole payment space now. And I think APIs backing into corporate treasury systems to enable payments is where we're going. Equally, there will be wallets. So wallets will form part of a treasurer's sort of scope, and he will have wallets in different central bank issued currencies and stablecoins as part of the portfolio that he manages over time. And as I say, it will be a mixed bag for a while. Well, you have the old rails and the new rails working together, and the whole question of interoperability is going to come into it, and the ability to settle. But I think as central banks are only ever going to be holding the funds, but they do give that liquidity and stability that you need for treasuries to feel comfortable with the funds that they're holding, and to feel that they are going to be looked after in a safe place. And if all we're doing is moving ledger to ledger, the funds stay safely in the central bank.
So this is brilliant, isn't it? So this is so what about the on-ramp and the off-ramp? What about getting money into this synthetic CBDC and out of it again? Surely that's so that's a big challenge about crypto so often is we've got these two worlds that are sort of rubbing up against each other, and there's not a lot of osmosis of movement between one and another.
Exactly. I've now got a Hoover going on behind me. Apologies.
So,
I think we're moving on.
By the way, by the way, you should. Yeah. No. Well, I want you to next time. Can you next time? Can you reserve the whole of the business lounge at Heathrow?
Exactly.
For you personally.
I think I need it. So yeah, the on and off ramp is always going to be the sticking point, and I think it's the sticking point on cross-border payments today. I mean, I think liquidity in some of the smaller currencies and the ability to go in and out of them is the difficulty is caused by the fact that these currencies don't have liquidity in them, in the same way as many cryptocurrencies don't have sufficient liquidity to go in and out easily. So that is still going to be a problem in the short term. However, at a point where we've put CBDCs in a lot of these smaller countries, and their central banks are holding funds equal to those CBDCs, and you can see that there could be reserves held in some of the more major currencies like GBP, USD, and Euro, then that would enable you to have the liquidity for those transfers. But as I say, that's the long-term goal, and that's your 20 years plus position. But in the interim, yes, you're still going to have the on-ramp, off-ramp issues.
Very, very good. Thank you. So next question. I'm not sure how much to answer this one. It says, why are treasurers not excited by payments innovation? I don't know. I'm excited about payments innovation. And I've spoken at the ACT conference a few times about saying, come up, wake up and smell the coffee. It's potentially transformational, this stuff. I really think it is. The payments industry is very keen on hearing the perspective and input of treasurers, because what we can't do is go out, facilitate this, as be the catalyst for new innovations, but don't take account of the role of treasurers, because they're critical in helping to make sure this stuff works. Let's go on to the next thing, Robert, which is, has anyone considered the environmental cost of using electronic money?
Yeah, and I think this is, again, a great point, because everyone looks at Bitcoin and says, oh, it's unsustainable, it's all this mining costs. And Bitcoin is the most expensive in electricity, because effectively the miners in Bitcoin have to compete against each other to get the next block. And so 99% of all electricity used to mine one block is wasted, because it's only one block that's created. However, if you compare that to the cost of if you compared a Bitcoin transfer, which would use 100,000ths of one block on the blockchain, so therefore 100,000ths of the electricity used to generate that block, to the cost of all the internal and external support groups of international banking to move a SWIFT payment. First of all, you've got the whole SWIFT network, which is the messaging system going all the way through A to B, Z to D to E, and then on top of that, you've got the corresponding banking situation where each of the banks will be moving the funds between their central bank systems. The amount of electricity that is used to move those funds, and the amount of people's time and effort and labor costs and electricity and office space is far, far greater, probably a million times greater than the cost of the electricity used to move it on the blockchain today. And that's not even taking into consideration that going forward, it will be on a CBDC blockchain, which is centralized, which won't require any fighting for the next block, because it's all made centrally by the actual system itself. So there won't be any cost. Yeah.
So it's very good. So essentially you're saying it's actually got the potential to be more environmentally beneficial, a lower environmental cost than the current system.
Correct. I'm saying that even the Bitcoin system that is so expensive in electricity today and wasteful is far, far cheaper in at least 1,000 to 1, if not 1,000,000 to 1, than the current banking system to move the same amount of funds.
Very good. Now, I love this question. This is very contentious. I have to also applaud SWIFT, who is a member of the Payment Association, and Visa and MasterCard and Discover, they're all members. But this question is about the big payment schemes. If we get to 24/7 settlements and with open banking, could this compete with Visa and MasterCard, given the recent news with price hikes and Amazon moving away from Visa? Now, be careful what you say, Robert, because my job is on the line here. But,
exactly.
But no, realistically, we should be entirely open and right on this.
No, but if we look at the way the schemes are going, the schemes have created already, well, Visa have done Visa Direct, which is effectively an open banking solution. MasterCard have recently announced something similar, where they're basically, and Amex, I know, have done it as well. So they're all offering open banking solutions using their rails to move funds. So I think the schemes themselves have already realized that this is not part of their long-term solution. They're all out there buying up other payment solutions in the marketplace. MasterCard have got the second highest number of blockchain patents in the world, after someone like Google, I think, has got the first.
Wow.
So these organizations are not just hanging about waiting to be dinosaurs. They are out there buying up key payment initiatives in the industry, and they're researching and innovating in the space already. So yes, they are more costly, but they work. And in this interim position, this interregnum time, they're going to be needed. We're going to be using their rails for the last mile for a long time. So yeah, don't discount anything in the short term, and certainly don't underestimate what they're doing behind the scenes to make sure they're ready for the next generation of payments.
Yes, very good. Well, thank you for sharing some of the stuff from behind the scenes at our end. We will be very open and transparent as we go through this, because as a communal, collegiate, collaborative effort, we found that's the best way to get everybody to be carried on the journey of change. We've got another interesting question, a couple more questions here. So the next one is, today, all treasury and bank settlements for loans, derivatives, and money market funds are still based on the concept of value date. This concept is embedded in processes, documentation, and legals. What's your view on how this will or should change going forward? Now, I don't know what value date is. Are you familiar with that?
I've heard the term used, and I think it refers to the date on which the value transfers between the parties. But if anyone in the audience wants to give us a more detailed understanding, then please do. But effectively going forward, everything will be moving towards real time. So query whether value date is actually needed when all payments move peer-to-peer real time. That is where we're aiming towards. And so maybe value dating is not required in those circumstances. Happy for clarification from the audience.
Yeah, or for somebody to share their views on to us privately or separately after this.
One of the few things that we miss our live audience who could just shout out the answer while we're in the
we could call on Bill and say, or Joanna, and say, could you please, who asked the question? Tell us a bit about it. But anyway, we are where we are. At least this is in real time, live, happening here, which is great. So the next one is. We're investing in a new payment architecture in the UK, as well as upgrading CHAPS. How will this be affected by CBDCs? And should treasurers be more focused on the new payment architecture, ISO 2202, and other developments that are happening now?
So, yeah, I mean, I because of the time frame of CBDCs, I certainly think we can't move away from this new architecture that's coming through. I think the upgrade to CHAPS is going to be very useful as well. I think there's going to be a lot of benefits to upgrading the CHAPS system, and there is no doubt that the new and the old will be working in parallel for many years, even once CBDCs have rolled in. Your tea lady came in there.
In fact, it was Tori, my colleague. So we're shortly starting a session next door, but and bizarrely, she wanted the cash. I don't know why she wanted cash. Everything in South Africa.
How on earth can a payments association have cash?
I know it's purely emergency cash. I think it's because maybe they want to get something from next door. I've been paying for everything on Apple Pay every day, goes straight through the curve and through to my Starling account. Wonderful, very easy, very efficient, the very first world. Anyway, so yeah, thanks for that answer. That's very helpful. So you're saying that they should be more focused on messaging, on crypto, on CBDCs, and everything else.
Yeah, and as I say, I think the new payment architecture that's coming through in the UK is going to be very useful, and the new CHAP system will be great. But it will be just part of the stepping stone towards this new future for everyone. But as I say, that's 20 years out. So 20 years out is a long way. I see we've got 5 minutes out.
We've got 5 minutes
less
out.
Time than 20 years.
Yeah, I know. Well, thank goodness. Look, everybody's been amazingly helpful with their questions. Thank you. I love this last question, which is, why do you think the Libra project failed? Everybody knows all about the big initiative by Facebook, or what are they called? Megaton or Mega World. What are they called? Metaverse.
Metaverse, of course, the new Facebook.
So why did the Metaverse originated Libra project? Why did it fail? And I think I know why, but why don't you tell me first?
Okay. No. I mean, I remember going on CNN to talk about this when it was all coming through, and the whole world was running around. I think the French Prime Minister said he would rather die than see Libra come into France. There was some very, very strong opinions, the over my dead body stuff. The US sent their team out to Switzerland to basically stop Libra being able to set up in Switzerland. I think they were too ambitious. They were too fast out of the blocks. But what they did do is they put stablecoins right in the center of everyone's mind. I mean, and stablecoins. The stablecoins also read CBDCs, because suddenly all the central banks woke up to this and said, if someone like a Facebook or a Metaverse is going to create their own coin, we need to have our own coins. And effectively, that's what sparked this whole central bank run towards CBDC. So it's been fantastic, but they got it wrong in a number of fashions. One was that they were going to create it on a basket of currencies and commodities that they were going to create that would create this ultimate stable coin. And that was always going to be a difficult play, because how do you actually manage the underlying basket of funds to show that they are always there and in existence if you're not going to be holding them at a central bank? So what's happened is Diem has come through now, and Diem is now looking at a number of wallets that it's going to be able to be issued through, but it's basically a US dollar tagged solution which will have funds held in bank accounts in US dollars. It still won't be as good as holding it in the Fed, and perhaps it will end up, as we say, maybe it will come out of our initiative to create white labeled stable coins and backed with central bank funds, and so maybe Facebook or Metaverse will be knocking on the payment association's doors soon.
That would be a joy. It would be a joy to have that, and it'd be fun. We'll have a good conversation, I'm sure, when they do. And I don't say if, I say when. So as my only comment to add to this, and we've just the last couple of minutes, is to say I don't think Libra did fail in that it put this on the map. It put this conversation. It kicked off the conversation. Nothing beats urgency than a threat and fear. I do think that central bankers have moved from a position of fear to a position of genuine curiosity. We're working alongside those institutions to ensure that when we get to 2022 and 2023 and the findings of our green paper in February and the pilots are rolled out over the next couple of years, that the industry can see the benefits of the experience that we're having. Robert, closing remarks from you.
I'd just like to thank the ACT for letting us have our little rant about the future of money and CBDCs in front of them, and I hope they've got something good and fun out of this. You and I laugh about this every day. We are passionate about payments. We are passionate about this whole future, and I hope some of that rubs off on you treasurers, and you wake up and smell the coffee, because it's coming. Very good. Well, later on today, we've got more sessions on CBDCs and digital currencies.
Thank you very much to Cheryl and Phil for helping us get on board with this. And from Tony and Robert at the Payments Association, thank you very much.